Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, October 10th, 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the follow-through day of last Friday, October 6th. Three green days. This is day 3 up since the follow-through day. The key was yesterday a positive reversal after initially gapping down on the Israel-Hamas news, and continued strength today. We got a little ahead of ourselves and faded in the afternoon, but that's completely normal uh, action after 3 strong days up. Check the trend gauge over here. Leaders are on neutral with a green sub arrow as they continue to improve, some breaking out of bases and holding their gains. Short term, S&P 500 first closed back above the 21-day moving average today. NASDAQ 100 3 closes above, but NASDAQ 100 made its first close above the 50-day moving average today. That's our medium-term indicator. So continued strength in these two above these two key moving averages will get us off of bearish. The key is to maintain the uptrend both in leadership and in the indexes, and then have drag the Dow mid caps and small caps along for the ride. Long term, you can see we continue to be bifurcated here. NASDAQ 100 and S&P above the 200-day moving average, small cap, mid cap, Dow below. A couple of these small cap, mid cap, and Dow ran into some declining moving averages today and were rejected. We'll take a look at that when we look at the index charts. So what happened today? Mild up open, early strength, very strong into the early afternoon, and then faded, and really a base with a mild downtrend bias to it in the afternoon. But really what it is about 3 hours of action working off the very short-term oversold condition that we had after being up 3 straight days. Also, we have PPI in the mornings, inflation data tomorrow, Wednesday, PPI, CPI on Thursday. Here are the numbers. Big 7 up 0.5%, RG8, good to see this, up 1.13%, S&P 500 up 0.5%, NASDAQ 100 up 0.55. These were both up over 1% before fading. Dow up 0.4, mid caps up almost 1%, Russell 2000 small caps up 1.1, global diversified 60/40 stock and bond up 0.5%. Bonds, well, what you'll see is because of the bond holiday that it looks like yields were down. And they are relative to Friday, but price also mildly down today because uh, the ETFs traded yesterday while you couldn't get a clean bond quote. You could reference it based on what the ETFs were doing. We'll take a look at that when we get to the charts. In-house GROTECTION up 0.46%, added a few things to the portfolio today. Let's get right into it. We'll start with the S&P 500. You can see very clear, 3 days up now. First, the follow-through day from Friday, gap down, close at the high of the day right below the 21 on Monday. Follow through to the upside today, got through the 21. Closed in the bottom third, close to the bottom third of the range. We've got the 50-day moving average and 4,400. That's going to be some resistance. It might take some time to chew through unless the market is absolutely stronger than strong. And unless it continues its strength, it's very possible, because we've had the overbought condition in the dollar, which is coming off, the overbought condition in yields, which is coming off. Those are things that the market needed to see. That combined with a normal spot to bounce 4 solid days of holding the 200-day moving average. Good spot. Let's go to the 5-minute. You can see here the gap down Monday, strong close Friday, gap down Monday, strong close Monday, continued strength into midday. Ugly candle here at 1:05 Eastern time, and that put the cap on the rally for the day. And then you can see kind of basing with a downward bias, just working off some of the short-term overbought condition. So there's the S&P 500, the second strongest of the indexes. The strongest is the NASDAQ 100, 3 days up also. Three closes above the 21, first close above the 50-day moving average. Slope of the 21 turning up, that's good stuff. We need to see the same with the 50-day moving average, and we want to hold. I wouldn't be surprised if we battled a little bit around the 50-day moving average here, pulled back a little bit, but really we want to hold the lows of today and certainly hold the 21-day moving average on any pullback. Let's go to the Dow. That's the mid cap 400. Let's go to the Dow. Here's the Dow. It ran into the declining 21 and the flat 200 today and faded. 3 days up, normal spot for it to pause. Mid cap index, MDY ETF, into the declining 21 and faded there again. 3 days up, normal. IWM, stop me if you've heard this before, ran into the declining 21 and paused. Actually, 5 days positive after putting in a bottom around this 170 level for small caps. Let's flip to the VIX. Starting to see some positive action here too. After a shakeout above 20 late last week, back down below the 200-day moving average, right around the 21. We want to see the 21 flatten out, roll over, and we want to see the VIX trend beneath it. Very similar to what we saw here back in June and here in late August into early September before we had the big spike up in the sell-off. But getting there, and then ideally below the 15 level too. That anything below 16 puts the ATR at around 1% for the S&P 500. When you consider everything that's going on with Hamas and Israel and the implications to the energy market, we've got multiple wars going on now. Wouldn't be surprised if this stayed elevated from a volatility standpoint. Doesn't mean that the market can't go higher. It just means that it might go higher, but the pullbacks might be a bit sharper. So that'll be something to keep an eye on. Let's go to the dollar. This is what stocks needed. We've had 5 down days in the dollar now, but we're into the 21. Is it going to bounce here, or is it going to continue to slice below? Most likely kind of go sideways after 4 days down and then decide what its next move's going to be, and that will have some impact on the indexes. Precious metals, GLD, inside day today. So although the dollar was down, precious metals couldn't make, at least the metals didn't make any progress. SLV also down slightly on the day, but the stocks made progress. GDX up 4 straight days, now back above the 21, and the 21 starting to flatten out. So keeping an eye on this, also showing relative strength since the middle of last week. So some improvement there on gold stocks. Bitcoin did not touch on that. BITO flat in a tight range. Now the broad bond market. BND up yesterday, kind of an inside day today, so holding the trend from Monday. That's the broad bond index TLT. Kind of the same thing. That's the long bond. Now you'll see a flat line on the yields from yesterday because they didn't trade, and then down today, breaking below the ADMA. So good stuff there. And then the 10-year TNX also below the ADMA. Still in an uptrend for now, just pulling back, but that was the combination that the markets needed to see some strength, and that's what we got. The question is, will it continue? Will we pause? Will we go sideways, and then this newfound strength continue with now that we've got seasonality in our favor, or will the Fed? There were some quotes out from some Fed speakers saying they don't think that we need any more interest rate increases this year. But then again, a couple days ago, there were still some saying we need one more. So we'll see how that plays out. Here's the tail of the tape. You can pause this to hit all the highlights. From a TA standpoint on the stochastics, it's favorable now for the indexes, the RG8, NASI RSI still oversold but hooked up. This is key. This trends for weeks at a time, and when it's trending higher off of oversold, it acts as a tailwind, and it gives us a little bit of reason to be patient and let the move play out. This is really a widely watched oscillator on our part, and we keep a close eye on this. Dollar coming off of overbought, same with yields. Day count from up 2 to up 3, third close above the ADMA, first close above the 21. on the S&P 500. We'll stay positive on our expectations if we can maintain this strength above the 21 EMA. 11 out of 11 sectors positive on the day. Biggest strength was in regional banks, semiconductors, and retail. On the downside, oil, gold, and silver, just the commodities. The oil stocks themselves were positive. Uh, Portfolio changes added to VRT, which we bought yesterday, and bought SMCI and PLTR on some strength. Hate buying on a gap up on the third day, but they were exhibiting some strength, so we took small starter positions. We're going to take a look at all the charts of everything we have in the portfolio, and this upped our beta from 1.05 to 1.18, so about a 10% increase. Bottom line on the day three up, early strength, afternoon fade, really normal. PPI in the morning, but for now we've got the NASDAQ 100 above the 50-day, S&P 500 above the 21-day. Let's get to some charts of what we own in-house today. First of all, what we started, we've been watching this SMCI base form. We sold after hours. Our last sell was at 303. We blasted through 300 today. Look at all the blue bars here for how much strength this has been exhibiting. Went above 300. We did 2 buys on this. We're actually slightly underwater on it, but good spot here. If it pulls back to the 300 level, that should provide support. But the volume was there, the strength was there, the setup was there. Good stuff out of SMCI today. The other buy today was Palantir. Got an upgrade pre-market, faded a little bit as the day went along, as this is mildly extended from the short-term moving averages. But this is one of the stocks that we want to get in, and we see the possibility of a strong move in this between the military bent that it has, the recent big blue bars that it's been showing. We'll sit with a little bit of weakness on this until the moving averages catch up with it, if need be. We added to VRT, very strong day, but did close at the bottom of the range. Relative strength at a new high, right at the top of this nice flat base. Also leadership potential here. What else do we hold in the portfolio? Nutanix. Uh, Looking for an add spot to this too. This looks great near the top of it. It's kind of a choppy base, but had a gap up on earnings, 2 consecutive gaps up on earnings, in fact, and held the 21 on any pullback, showing relative strength the whole time, relative strength making higher highs. So it's confirming the price. Continued strength out of Zscaler, also out of CrowdStrike. Those are 2 of our largest positions now. And NRGU we bought yesterday, that's holding up. Looking for some entry into the defense industry if that continues to exhibit strength. Mixed results today uh, on uh, on some of those names. Let's take a look at the ETF that we're looking to play it with is DFEN. Higher move today. The other 2 other stocks, TXT has been in the 21 over 21. That pulled back today near its highs, and we identified GD as our favorite name yesterday based on the overall technical pattern and the action. That pulled back from 240 today. So those are some possible ways to play it. And with that, we're going to wrap it up. Remember, it's not how much you make in the market, it's how much of that you can keep. The market right now is saying that we've shifted from protection mode to growth mode. We've increased our exposure in response to that. We've got stops on everything, but the seasonality is there with us, and we'll see if this can lead to a nice fourth quarter rally. But as always, we're prepared for any outcome. And with that, I'm going to wrap up the video for Tuesday, October 10th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.